All right, another second of the month. Not a whole lot going on this month. We did sell off a bit of the Xcel Energy last month and took some profits. Looks like it's still up about 12%, which is good, but we're gonna stay where we are for all the reasons that I listed last month. McDonald's is still up about 11%. We're going to stay there. Heard a story about them going to fresh beef for their quarter pounders in a lot of their restaurants. So they're really trying to be more healthy and get rid of that bad for you stigma. So that's a good thing. They got out of a lot of their restaurants. Most of their restaurants are now franchised. So that's good too. They're basically just collecting cash at this point. Um, Bell Canadian is what we purchased more of this past month, and looks like it's done um, not terrible. We're in right now at 44.32, and it looks like the price now. Let's see if we can find this really quick here. Let's see. Looks like the current price right now is 44.06. So we're just about looks like 25 cents off or something like that. So we're gonna stay where we are for the time being. Exxonmobil is still a bit of a hold right now. We do have a buy signal on it, but we can only profit less than 0.5%. So I don't think it's worth to really spend the money right now on doing that. So we'll just stay where we are with ExxonMobil. They are in talks with climate change and all this kind of stuff, and uh, there's some investigation going on as to whether or not they knew about climate change. It's all ridiculous. I'm expecting for it to all get kind of pushed under the table. Oil right now is kind of steady. It's not really moving higher, not really moving lower. And I think a lot of people are afraid that the prices are going to drop lower. And I think the last time that oil got down to, $20, $30, it really caused a lot of trouble around the world, including places like Venezuela, which is still roiling from that low oil price. And you have the Saudis and all these guys that's really trying to keep the price up, but you have Americans steadily pumping more. So oil is going to be kind of a no touch right now for us. We're going to wait to see kind of what happens. And we're happy with where we are with ExxonMobil. They do a little bit of everything: drilling for oil, refining oil. So anything around oil and that whole energy sector, we're covered with ExxonMobil. The one thing that I do worry about, however, is the dividend. But they are a dividend stalwart. They've been paying dividends for a very long time. Don't expect that to change anytime soon without somebody's head rolling. So we're going to keep listening to the earnings calls just to make sure that nothing is being said about possibly rolling back that dividend. If they do, it is going to be disastrous for the stock. I mean, it's going to kill the stock price. So we're going to be definitely paying attention to that. Right now, at this point, they don't have enough cash to cover the dividend, which is something that we worry about. But for such a large company like ExxonMobil that's worldwide, I mean, they generate cash on a daily basis. Their credit is one of the best in the world. So we know that they'll be able to cover whatever liabilities that they have, including that of dividends. Looks like everything else is really kind of just where it is. Coca-Cola, Pfizer, GE, I've discussed those. Don't have a lot of money in those. So even though they are down a little bit right now, I can't buy anything. Coca-Cola, we have it at 51.14, and that's actually an incorrect number. In order to show what I really have it at, I need to do this, but I think I can't keep that formula there without throwing off everything. Yeah. So the point is, though, we have it at 36.64, and right now, let's see, 36.64. Where's my mouse? Uh-oh, software starting to freeze on me. Let's see, 3664. And right now, this thing is 3583. So we're about 80 cents away from being even on that. So again, not bad, not great, but we're okay with where we are. Recently, Coca-Cola announced a 50% increase in their profit over the past year, and I'm really playing this whole climate change thing. About a year ago, Coca-Cola was complaining that weather was the cause for their slump in sales, and so with things warming up and hotter and hotter winters, I'm going to bet on their sales becoming much better. And Coca-Cola is always innovating new ways to market itself. Last year they did a really great thing with the Share a Coke with the names on the Coke cans and stuff like that, and that was really brilliant. What they're going to come up with next, I have no idea. What we do know, though, is that they are doing great things with water. And in the UK, they're really pushing sparkling water, which is popular over in the UK. So the other thing is the sugar-free Coke. I think I haven't tried it, but what I've heard on the earnings call is that the sugar-free Coke tastes a lot like Coke Classic. I can't talk, so that's promising. Maybe one day I'll pick up a sugar-free Coke and see what it tastes like. What I'm really interested in them doing, cane sugar Coca-Cola is what I'm interested in. I understand that they have the cane sugar Cokes in Mexico, but not here in the U.S. So that's something that I would definitely like to see. Them becoming more health conscious. Along with their current marketing schemes. Pfizer, we've talked about that one before. That one is down just a bit, not a whole lot. But again, because of the small amount of shares and the large commission, I can't do a whole lot with it. So we're just kind of waiting to see what happens. They still have all that cash on hand, so they're going to buy something. What exactly, we don't know. GE, again, small number of shares. But we got a pretty big commission on it because it's just an old position. But we got it at such a great price. Again, we're waiting to see what happens here, whether or not it drops down far enough for us to buy more, which honestly I doubt, or it's going to have to move up far enough for us to sell out of it. Either way, we're going to sit back and collect the dividend. GE and Pfizer isn't going anywhere anytime soon as far as price. Equity residential. This one has a buy signal, but just like Exxonmobil, 0.8%. It's really not enough profit for us to jump into this thing. This is one of our largest holdings actually, and we got it at 63.43. And let's see where it's at now. I think it's at 62 and change. It was recently at 63 just last week, and it dropped back a little bit. I believe Thursday or Friday, one of those two. But this thing is a residential REIT. Real estate is not. Here we go. 62.19 is where it's at. So we're about $1 out. Again, not the terrible position to be in. Collecting a fairly decent dividend on that. Matter of fact, I'm just kind of curious for my own. 3.2%. We'll sit back and take that. Again, though, just like ExxonMobil, their dividend is going to be called into question. Definitely the next earnings call. But they have committed themselves to the dividend. They have been paying dividends for at least 10 years consecutively, without a break, regardless of market conditions. So when we talk about 10 years, we're talking about the what is it called? The financial repression, whatever happened back in 2007, 2008, 2009 when the market crashed. They continue paying dividends even then. So we don't expect that to change. However, again, like I said, we'll stay on top of it and make sure there's no talk of that changing. If it does, it can cause a problem not only for the stock, but also every company, I would say, in the real estate sector. So again, we definitely want to stay on top of that. But for right now, we're okay. We're just going to wait and see where this thing goes. Weyerhaeuser, again, hasn't moved up a whole lot, but it hasn't lost anything either. It's actually up right now, somewhere around 33. We got it at 32. So we're good there. Sunlight Financial, the finance sector is moving along, not doing a whole lot. Texas Instruments is actually up about 8% right now, but we don't have anything that we really want to move into, so we'll stay where we are there. All right, what I'm going to do now is I'm going to go over and take a look at just how the market has reacted over this past month. And what I'm looking at here is, let's get rid of these. There we go. So what we're looking at here is the average difference this month. And let me get rid of this one so we can see everything. There we go. All right. So who came out best this month? Looks like basic materials, negative 2%. Consumer goods, 2% up. Defensive stocks didn't really do anything. My goodness, look at the energy sector, negative 3%. It really got hit hard. Finance down 3% as well. Health came back just a little bit. Industrials, negative 2%. Real estate down 1%. Tech down 2%. Telcos down almost 1%. And utilities. So it looks like everything in April lost money except for, let's go back to this. Looks like the consumer stocks. Wow. And who outperformed? Best Buy. Now, Best Buy is something that we've been talking about for quite some time. Best Buy, for whatever reason, has been performing very well, even though it is still a retail play. You know, it still has a store where people walk in, and those have been getting killed lately. But Best Buy is outperforming everyone. I mean, no questions asked. Can I get into that stock? No, I can't. I can't do it, you know. But it has outperformed. I mean, no question about it. Close second is Las Vegas Sands, followed by McDonald's, and that's where we're at. Looks like L Brands down another 10%. I've been calling this a short for a long time now, and it looks like it is it. It is a short for sure. I think it's just going to lose money until it can't lose anymore. Everyone else, pretty much, International Paper dropped down some. Everyone else is kind of in line. Staples, it's been kind of a dog. But this Best Buy, though, I mean, my goodness, that thing has been performing very well. And just, you know, on average, it's beating everyone, 2% a month. That's crazy. So who was the worst? I think basic materials. No. It was energy and financials. And energy was negative 3, financials negative 3. So they're both the same. And let's see who came out the best here. It looks like COP outperformed everyone this past April. Not a stock that I follow, COP, but I have heard the name ConocoPhillips. I actually heard someone speak about ConocoPhillips earlier today. Exxonmobil fared very well, which is, you know, why we're in Exxonmobil. You know, when the rest of the sector is doing bad, Exxonmobil will hold its own for sure. Looks like Chevron and Marathon Oil, Valero, you know, Plains All American, all the high volatility stocks, of course, when the sector is performing poorly, they are going to perform the worst. And let's take a look at Aflac. I'm really curious to see what Aflac has done with the rest of the finance sector falling as it has done. And it looks like Aflac has performed fairly well. So that's a company that I'll keep an eye on. I think the PE ratio is still fairly low in that stock, and that's a insurance carrier. Sun Life Financial is where we are. It has completely outperformed the rest of the sector, and it actually gained a little bit when the rest of the sector lost pretty big this past month. The industrial sector, just a dog right now. It's funny because people keep talking about Trump, boosting the industrial sector with all these jobs and government spending that he's going to do and stuff like that. But the stocks just have not performed well at all. Paychex is my favorite in this group. Waste Management outperforms, but Paychex is definitely a favorite of mine. We're in GE. Looks like Paychex lost quite a bit this past month. Caterpillar is a stock that everyone has been talking about. It isn't the best in the group, but it has outperformed surprisingly. It is why it's such a big deal, because no one expected it to perform well at all, and it's performed fairly well. So that's a big deal. Real estate, the high flyer that we're always looking at, DLR, Digital Realty, kind of came down some. EQR is where we are. Looks like it dropped with everyone else. HCN is the healthcare REIT, and we have VTR, which I don't really pay any attention to. Looks like it outperformed everyone this month. So I'll look at VTR and see what the performance has been, just to kind of keep abreast of what's going on, and I may read a little bit about it tonight. KIM is at the top of our list right now as far as real estate goes. It looks like they came down with everyone else as well. Technology looks like it came back this month. Seagate is where we were. Looks like people are taking profits in Seagate finally, so it's dropped down about 5%. Worst performer in the sector, but it didn't have anything to do with the company. It's just people are taking profits after making all that money. Texas Instruments, same thing. I mean, it ran way up and now it's starting to come back. Microsoft is still outperforming everyone in the sector. But for me personally, that stock is just too expensive to get into right now, and I would hate to get in at such a high price only to see it come back some. Plus, I've never really liked the company, to be very honest with you. I think Microsoft Office and all those things, it's a staple for sure. But again, that's the problem. It's a staple. It's like rice, right? I mean, there's nothing exciting about rice. It's a staple. It's not going anywhere anytime soon. But really, how much money can you make on it, right? And they're trying to do stuff like the Office 360 and stuff like that, which is a great product. Most businesses I know buy into it, or that I've worked with buy into it. But how much profit is there? I don't know. Telecoms is something that I'm actually in right now for my personal account, as well as the partnership, of course. And it looks like Bell Canada performed the best out of the group, which is good news to hear. AT&T outperforming everyone, of course. The sector itself came back just a little bit. Nothing to say really a whole lot about that. Utilities, again, about even. Not a whole lot has been going on. We're in Xcel Energy here. Looks like it outperformed the sector for the month. DTE is actually outperforming the sector altogether. So I'll look at DTE, and we'll look at Best Buy again, and VTR. I'll check out just to see what's going on with those. All right, something I was curious about. I actually got a chance to see this before I turned the camera on, and that is the portfolio that outperformed all the portfolios this month. And I haven't looked at the portfolio itself. I just know which one won, and there it is, dividend and alpha, which is interesting because just last month we were looking at all the down moves, right, as the best performing portfolios. And right now, looks like the dividend stocks with some alpha baked into them are what's outperforming. And let's see by how much. So that's 5% dividend returns, dividend beta. Let's see, dividend 4. So you know what's going on? It looks like all of the high dividend stocks are outperforming. So what that means is that people are going into these dividend companies because they're safe, right? Everyone is expecting the market to move down, and it has moved down some, but not in any major way as of yet. We've had a few large moves, but not a whole lot. So that's good. We're in those dividend stocks. We want people to jump into those dividend stocks to drive the price up, which is what I think is happening, especially in telecoms and utilities. So anyway, looks like Energy Transfer Partners, Seagate, of course, CTLs, the telecom, Staples, is the industrial, HST is real estate, CM, that's the Canadian bank, ETR, utility, Weyerhaeuser, Altria, Paychex, and Pfizer. Okay, so we're in a quarter of those, right? Not too bad. All right, let's look and see if anything has changed here with this one. Just curious. Last month it was the down moves, which is now at 1934. Let's see what the rest of them are. And the reason why I'm interested in this and even going through this is because in June I have to rescore all this stuff, and we'll be using an entirely different scoring mechanism to decide what stocks to buy. And it appears that what we're going to end up using is the down portfolio. Look at this, alpha and down. That's a high flyer, and that's at 21.26. 13. Yep. So that's best performing. Beta returning down. Yeah. So again, it goes back to those down stocks. Now I don't remember exactly what it was last month, but I do remember it had something to do with the down portfolio. So that's what we'll probably be looking at in June. All right, let's see here. What else did I want to look at? That's it. That was quick and easy this month. Not a whole lot going on. Not a whole lot to talk about. Market is kind of just moseying along. So until next month, I'll holla.